Let me ask you something. Why is it that the wealthiest families in America aren't just buying life insurance on themselves, but on their kids? And not just parents. Uncles and aunts and even grandparents can do the same for their families. Meanwhile, most families are debating between saving a few $100 or putting money into a 529 plan and hoping the market cooperates. So, what do they know that most families don't? That's what we're going to break down today. Welcome back to Banking for Legacy podcast. My name is Nelson Pizarro, and what we do here is super simple. We teach you how to take back control of your finances, build wealth without relying on banks, and create a system that lasts for generations. If you haven't yet, make sure to check out Nelson Nash's work, Becoming Your Own Banker. And of course, like us and follow us on all social media platforms. And let's get started. So, what is a juvenile policy? It is a permanent life insurance policy on a child between 0 to 18 years old. That means it builds cash value over time. It's guaranteed to be there for life and locks insurability at the youngest and healthiest age possible. Now, here's something most people don't realize. The child is typically insured for about half of what the parent's death benefit is. And also, your uncles, your aunts, and your grandparents can insure them too. Let's talk about what families like the Rockefellers do. They don't just pass down money. They pass down systems. They use life insurance to store value, create liquidity, fund opportunities, and keep money flowing inside their family. But why? Because they understand one big thing. Control is more valuable than returns. Again, let me repeat that. Control is more valuable than returns. When you insure a child early, it's extremely low cost. It compounds for decades, and it becomes a financial tool that they can use as an adult. Why am I even bringing this up? Because every time I get on a discovery call, we start with the basics, but then eventually the conversation always shifts to how do I give my kids a head start? And that's the real question. Not just how do I save, but how do I set them up to win financially before they even start? What most families are currently doing, and let's be real for a second, most families fall into one of these categories. The first one, they're not saving at all. And honestly, this is understandable. Life is super expensive right now, or it's always going to be. Inflation is real. Things come up. But doing nothing means the next generation starts with exactly nothing. 2, the invest early, become a millionaire idea. You have heard this before. If you invest X amount of dollars when your child is born, they'll be a millionaire by the time they're 18, 20 years old. Sounds great, right? But here's the reality. The market goes up and down. Timing matters. And most families don't stay consistent for 18 years. Plus, you can't touch that money because you stopped the compounding. And if you do take out the money, you're going to get hit with taxes as well. So it's not very guaranteed. Let's go to number 3, the 529 plans. Now, parents move into the 529 plans because it's a so-called tax advantage and it's for education. But here's a trade-off. Your money's locked up. Use it for non-education? Well, you get penalized. Markets drop at the wrong time? Tough luck. Kid doesn't go to college. Now what? So let me challenge you with this. What if instead of asking, where should I invest for my kids, you asked, how do I give them control, access, and guarantees first, and then invest from a position of strength? That is a completely different game than most people play. And again, if you like this podcast, share it to everybody. So what is the solution? Well, this is where juvenile policies can come into play. They solve multiple problems at once. Guaranteed growth component, tax advantages, liquidity, you can actually access the money now and not get penalized, no market volatility risk on the core asset, and they're insured and locked up for life. And most importantly, you are creating a financial foundation for your child. So when they turn 18, 20, 25, 30, 50, they don't just inherit money. They inherit a system. Now, let me be very clear. I am not saying don't invest in a Roth IRA, don't use a 529 plan. That is up to you. And after a discovery call, if you want to take those paths, awesome. But remember, both of those are still tied to the market. So are you really diversifying yourself? Just think about it. Which means there is ups and there's going to be downs. If you're a parent, an aunt, an uncle, a grandparent, and if you've been thinking, how do I truly give the next generation a head start? This is the conversation you need to have. I offer free discovery calls where we walk through your current situation, your goals, and whether this strategy even makes sense for you. No pressure, just education. Reach out, book a call, let's build something that lasts. I'm Nelson Pizarro. This is Banking for Legacy Podcast. And at the end of the day, it's your bank, your money, your legacy. Until next time.